I think that the cost of borrowing has got to have a huge impact on buy-to-let investors. We already know that the yield on the average new buy-to-let investment is something more like 4% than 6%, but we know that the cost of borrowing is somewhere between 6 and 8%. So anyone who buys the average buy-to-let investment now is going to lose money every single month. We have seen quite a few surveys showing that prices are falling in some parts of the country, particularly down the southwest, in Wales, etc. And we know that asking prices have come off quite a lot, well, not a lot, a few percent, even in central London, which suggests that there is some confidence leaching out of the market. That's important. We also know that repossessions are going up a lot. We know that there has been a return to the market of the people who offer to buy the houses of the desperate for much less than their market price and then let them rent them back in the short term. All these sort of things are signs of stress in the market. And as interest rates go up or mortgage rates go up, we know that many more buy-to-let investors are going to start feeling the stress and they're going to start selling. I don't see how they can't. The property market has long been a bubble and search for pin, and I think that the credit crunch may be it. Not necessarily Northern Rock, because Northern Rock is a symptom rather than a cause of the credit crunch, but the credit crunch in general. We know that prices are far too high. They're at multiples of income that has historically never been seen before, and you can fiddle the numbers however you like, and lots of property builds do, but the basic point remains that house prices are far too high by any conventional measure. And with the credit crunch meaning that people can no longer borrow the absurd amounts of money that they could borrow only 6-7 months ago, it's, I think, inevitable that house prices have now got to fall back to more realistic levels. We last saw this business of companies existing who would buy your house below the market value and then let you live in it for rent at the bottom of the last property collapse. And so I think it tells us something quite nasty. It tells us that people who want to sell their houses cannot do so at the price that an estate agent would tell them they should be able to, and they certainly can't do it in a hurry. And it tells us that there are enough desperate people out there for these companies to be able to make a business from it. That's not good. Well, I'd say it's absolutely true that property prices do always go up over the very long term. The line of property prices would always go something like that over the very long term. But prices over the shorter term don't actually follow that line. They move in a cycle. So they'll move around the line like this, going up over the long term, but up and down in the medium term. So what you want to ask yourself if you're going to buy now is, do you want to buy there on the cycle, or do you want to buy there on the cycle? And right now we're here. So if I was wanting to invest in property, I think I'd wait until we were more like here.